Hello students, welcome to today's session on activity and profitability ratios. So students, in my earlier video, I have taken the other two types of ratios and these two ratios will be taken up now. Okay. So starting with the activity ratio, students, so the objective behind finding out these activity ratio is to understand the level of turnover or the level of business activity which is happening in the business in an accounting year or in a specified accounting period. So there are 6 types of ratios which are found out using in this category. So these are 6 types of ratios. We have inventory turnover ratio, that is cost of revenue over operations upon average inventory. Then trade receivable turnover ratio, net credit revenue from operations divided by average trade receivables. Net trade, similarly, we find out the trade payable ratio. Then investment turnover or capital employed turnover ratio is also found to assess the turnover of the company. Then fixed asset turnover ratio and working capital turnover ratio. Okay, now let's find out these ratios using the or with the help of a question. So students, we have this question over here uh, and some information is given to us, some figures are given to us. We have to find out gross profit ratio, inventory turnover ratio, net profit ratio and working capital ratio. Okay. So let's find out these ratios. So the first ratio is gross profit ratio. Gross profit ratio we have already found out in the last class. So we can straight away move to inventory turnover ratio. So inventory turnover ratio, the formula for this is, okay. So this is the formula for this. So we are going to use this formula to find out inventory turnover ratio. The formula says cost of revenue from operation. This is given to us here, divided by average inventory. Now, average inventory is also given to us. So, all what we have to do is just put these details into this formula and find out the answer. Now, sometimes suppose average instead of average inventory, we are given with the opening inventory and the closing inventory. Then we have to find out the average inventory using the two, that is opening inventory, closing inventory, and in between, if there have been some purchases, then those purchases also all averaged out. Okay, no. So let us find out this ratio over here. This says 19 lakh 20,000 divided by average inventory is 8 lakh, right? And if we calculate these two, we find the answer to be, that is 2.4 times. So 2.4 times. Okay. Now, what does this conclude? This conclude that the cost of revenue from the operations is 2.4 times the average inventory, right? That is the now average inventory which is used in mostly in production. So we can find out the kind of, that is, or we can also say that the total turnover, or I can say the activity, production activity in the entire accounting period is 2.4 times. Okay. Then the next set of ratios that we have is net profit ratio. Okay. Now, net profit ratio also we have worked out earlier. So again, now fine, we can do it again, right? So net profit ratio. Hmm. Okay. So net profit ratio, how do we find out net profit ratio? So what is the formula for net profit ratio? Students, net profit ratio is, that is net profit divided by net revenue from operations into 100. into 100. Okay. Now let us see. Net revenue from operation is given to us, right? Okay. Now, is it given to us? No, it is not given to us. We have to calculate. So we are given with revenue from operations and cost of revenue from operations. If we subtract cost of revenue from operations, we get net revenue from operations. So net revenue from operations this way comes to okay. So now let us write this formula here. Okay. Hmm. Okay. Net profit is given to us, which is 3,60,000. 3,60,000 divided by net revenue from operation. So revenue from operation is given to us, that is 25,20,000, and cost of revenue from operation is given to us, which is 19,20,000. So let us find out net revenue minus 18 lakh. This comes to 6 lakhs into 100. Right? So now, if we calculate this, how much do we get? Let's do the quick calculation here. This is 3,60,000 divided by 6 lakhs into 100. So we can say that this is how much? This is 60%. Okay. So that means what we can say is that the net profit is 60% of the net revenue from operations. Then we have working capital ratios. So let's find out working capital ratio. Okay. And the formula for working capital ratio is, that is a working capital turnover ratio, rather is net revenue from operation upon working capital. Okay. Again, net revenue from operation, we have already calculated, that is 6 lakh. And the working capital is what? Working capital, how do we find out working capital over here? Working capital is current asset minus current liabilities. So we write this 6 lakh divided by, now, as I said, working capital is current assets minus current liabilities. So let's see how much current asset we have. We have current liabilities as 6 lakhs, and current asset is how much? See, we are given with liquid assets and we are given with average inventory. So current asset is liquid assets plus inventory. So if we add these two together, we get current assets. Okay. So let me calculate this. plus 8 lakh. So this becomes 15 lakh 60,000 here minus 6 lakhs. Okay. So this is 15 lakh 60,000 minus 6 lakhs, and that comes to 9 lakh 60,000. Okay. So this divided by 9 lakh 60,000. All right. Okay. And how much do we get here? Let's find out the ratio. That is 6 lakhs divided by 9 lakh 60,000. And this comes to 0.625. Okay. Yeah. Okay. Now, so this is how we take out these ratios. Okay. Next, we move to the finding out the next set of ratios, that is profitability ratios. So, profitability ratios are what? Basically, uh, see, profitability of the company or the financial performance of the company is what every business owner or businessman is concerned about, right? Now, this performance can be seen as summarized in the statement of profit and loss. So, profitability ratios are calculated to analyze the earning capacity of the business, which is actually the outcome of utilization of resources employed in the business. Okay. Thus, we have these last set of ratios, that is profitability ratios. Now, how many ratios do we have? We have a lot of ratios, but I will be taking up a few main ratios to cover with. So these are the main ratios which actually company goes in for calculation in order to find out or assess the profitability of the company. We have gross profit ratio, operating profit ratio, net profit ratio, return on investment ratio. Few of the ratios we have seen earlier also, and we will be doing it again. Okay. So now let us understand these ratios with the help of a question. So students, this is a question. We are given certain information from the balance sheet of the company, and then we are asked to find out three ratios: operating ratio, gross profit ratio, operating profit ratio. So let's find out these ratios. Let's start with the gross profit ratio. This is the formula for gross profit ratio. So we start with gross profit ratio only. Okay. So gross profit ratio is a ratio between gross profit and net revenue from operations. How much is the gross profit earned by the company here? Let us see. Okay. Now, gross profit is net revenue from operations minus cost of goods sold. Okay. Let's write this formula here. So gross profit is net revenue from operations minus cost of goods sold. Okay. Now, revenue from operations is given to us 60,000. Cost of goods sold is given to us as 30,000. So, using these two figures, how much gross profit do we get? We get 30,000 as the gross profit. So let's use these numbers here. This is 30,000 divided by net revenue from operations is given to us as 60,000 multiplied by 100. So how much do we get? It is 50%. Okay. So gross profit what do we conclude? What do we interpret from here? That is gross profit ratio is that is gross profit is 50% of the net revenue from operation. Now we come to the next part, that is operating ratio. So basically operating ratio is what? Operating ratio is that is uh, uh, can say cost of operations ratio. Okay. So uh, we take out the formula from here. Operating ratio formula is this. Yeah. Okay. So operating ratio is cost of revenue from operations plus operating expenses divided by net revenue from operations. Now cost of revenue from operation is how much? Cost of revenue from operations is nothing but cost of goods sold, right? And then we have operating expenses given as 20,000 here in this question. So we add these together. So this is 30,000, this is 20,000. This makes it total of 50,000 in the numerator. Again, net revenue from operations is 60,000 multiplied by 100. Right. So now what ratio do we get out of it? The ratio is 83.33%. All right. So this means what? That the operating cost is the 83.33% of the net revenue from operation. Now the third set of ratio, that is operating profit ratio. Operating profit ratio. Okay. Now, the formula for operating profit ratio, if we go back here, so this is operating profit divided by net revenue from operations into 100. Or in case if we are not clear about this operating profit, then we can simply use the formula 100 minus operating ratio. Okay. So we are going to use this formula only since we have already calculated operating ratio. So this is 100 minus 83.33. And how much answer, what answer do we get here? The operating profit calculated is 16.67%. Now, since these all are in percentage only, right? Because what is considered to calculate the return on investment. Now, why I have taken it separately? Because students, this is a very important concept, and all the companies, all the business owners are very much interested to find out their return on investment on the business, because every businessman is concerned whatever money they are investing in their business, how much return they are getting in, right? So that is why this ratio becomes very important. Okay, so the formula for return on investment or ROI ratio is this. Let us start with this formula. Okay. So this formula says profit before interest and tax divided by capital employed into 100. Okay. Now, can you see this particular thing mentioned anywhere? Both the things, profit before interest and tax and capital employed, is not mentioned. That means now we have to first calculate this. So let's start with profit before interest and tax. Now let's see what all is given to us. We are given with profit before interest. Acha, it is given to us in the question. Okay, sorry. Okay. So profit before interest and tax is already given to us here. Okay. So we don't need to calculate. But yes, we will have to calculate the capital employed. Okay. How do we calculate this capital employed here? Okay. Now, capital employed means the total capital that is shareholders' funds, basically. So, the shareholders' funds comprise of three things: equity share capital. In case preference share capital is given, then that also be added. But since it is not given here, so we will be only taking up equity share capital, reserves and surpluses, and money received against share warrants. Okay. So, let us add these together. Okay. See, money received against share warrants is given here. Then share capital is also given to us here. And reserves and surplus is also given to us. We are going to add all these numbers together. So money received, this is 20,000 plus share capital is 2 lakh plus reserves and surpluses is 1 lakh 20,000. So this makes it how much? 3 lakh 40,000. Okay. Now we are going to use these numbers to find out a return on investment. Okay. So fine, we start with it, with calculating this. So profit before interest and tax is 1 lakh 40,000 divided by total capital employed is 3 lakh 40,000 multiplied by 100, and the ratio that comes out here is 1 lakh 40,000 divided by 3 lakh 40,000 multiplied by 100. This comes to 41.2%. Okay. So 41.2 is the return on investment of the business. Okay. Now, net profit ratio, though we have already calculated, but since the things are given to us, so we can even find out the net profit ratio also here. Now, what is the formula for net profit ratio? Since we have done the calculations earlier also, no issues. We will be doing it again. So we can take up the formula here. This is net profit upon revenue from operations. So let us see. We are given the net profit also here, which is 2,17,900, and revenue from operations is 4 lakh. Let's find out this ratio also. So this is 2,17,900 divided by revenue from operation is given to us as 4 lakh. Into 100. Okay. So how much this ratio or how much percentage is net profit of the total revenue? That is 54.25%. Okay. All right. So yeah, that's all for today's session, students. I hope you all understood this topic. Keep practicing and I'll see you the next time. If you have any doubts, please contact me through my Urban Pro profile. Thank you.